Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after challenging the key level on numerous times at 70.15, as you can see here by the outline, the market has ended in a negative bias after posting an engulfing candle and heading back towards the support level of 69.65. Given the fact that we have rejected this level and also with the engulfing candle, we need to see now what the next level is to break. I believe that if we get through the 69.65 level, then that would confirm the downside target to 69.25 or even back to the lows that we saw back in June of around 68.70 and with 70 cents capping. Turning to the euro, as widely expected, the European Central Bank or the ECB left interest rates unchanged at 2.4%, a decision that was widely expected and generated little market reaction. Instead, renewed demand for the US dollar dominated trading as escalating conflict in the Middle East continues, and therefore all eyes will now shift as well onto the Federal Reserve next week, which is expected to see rates unchanged at 3.75%. As we look towards the technicals now, the engulfing candle may put further risk to the downside around 113.40.50, reassess from there. If we do see a break, then we're looking down towards the mid 112. Upside, well, there's still a lot to contest with around 114.15 and 114.55 and 115. Well, dollar yen hits a 40-year high as the market posts a fresh 163.93 high, and with much uncertainty that the Bank of Japan could still intervene and see all these gains wiped out and look back towards the lows of 160 to 160.5. So I'm keeping an eye on the market. We do need to see a break beneath 162.70 to support the bearishness, and I feel that we could see that very soon, considering the MACD is still rather flat. Further weakness comes into sterling and now looking maybe towards the level of 132.35, given that we are in the sixth consecutive bearish day and the technicals have gone negative. Turning to gold, well, the market's showing a little bit of weaker play here, and we are under the level of 4,085. And given that, still could see the move towards 4,000 or even 3,980, but we're still bullish because we're still remaining above the break level, and then I'd expect the next rally on to around 4,100 to 4,300. Oil, well, the targets have been achieved, and that was 85, 88, and $90 a barrel, and I'm now neutral and see how this market plays out. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.